Good evening, everyone. Thank you for joining us today on our webinar, Bluechip Investing, the TRUBLU way. So when we ideated our product, TRUBLU, what did we have in mind when we gave the name TRUBLU? We wanted to give our investors the truest of blue chips. Now you may ask me, what is so true about a specific blue chip that the other blue chip does not have? So the word blue chip itself has had a lot of different descriptions over a period of time. We've had, or rather, you would have seen companies like Yes Bank or a DHFL being called blue chips in the past, but we all know where they are today. So it is exactly not very easy to find out the right blue chip for you as an investor, which is why we wanted to bring you a product which gives you the truest of blue chips in the country. The ithought way before we begin. So when we gave the ithought way, which is our investment philosophy, this applies to all our PMS products and all our products offering as such. So what we have in the ithought way is the long-term focus. We do not get into momentum trades, or nor do we get into short-term ideas. Our focus has always been for the long term, and towards the long haul is where we want our investors to focus as well. And non-consensus investing. What this means is very simple. See, when we get into a consensus type of investing, what we do not ensure is the valuation that we are comfortable with. Because chances are that when you get into a consensus mode of investing, the valuations may be too steep for your comfort, which is why a non-consensus investing is where you get your valuation comfort for you to get in and play the long haul. And it's a bottom-up approach. Why we go towards a bottom-up approach is very similar to why we have a non-consensus investing in our investments philosophy. So bottom-up approach ensures that you go selective with respect to ideas and don't go and you're not top down, or you don't bunch up your ideas, which makes it much more flexible than the traditional PMS product investing. And we have a very high focus on risk management, because what we usually see is the conception that every PMS is a product, or every PMS product is a product which takes a little bit of an extra risk than mutual funds. But time and again, we've proved that risk management is at the core of our focus, and we manage risk than most mutual funds out there. What does exactly the TRUBLU portfolio try to give you? It is about capturing the mega trends. Very simple. It captures the India growth story, and it goes specific on the India growth story to figure out who are the global champions which can make or which can let you take advantage of the India growth story. So when you combine the two, you get a beautiful portfolio, you get a high quality portfolio like the TRUBLU portfolio. And the USP of TRUBLU, it is 100% pure large cap portfolio with a high active share. Now, what this means is, you've seen that in the last 1 year that usually it is a misconception that only small caps or mid caps can give you aggressive returns. But what we have seen in the last 1 year is the mid caps and small caps have taken a beating, or good small caps and mid caps have done well. But then overall, as a bucket, you've seen large caps overperforming, right? Outperforming the overall market, which is why it is going to be a very solid portfolio of high quality large caps, which can provide the much needed aggression. And it is going to be a high active share portfolio. So it's going to be a concentrated portfolio of high quality large caps. And as always, as it is with the ithought PMS house, it's going to be a low churn portfolio. We're going to follow a buy and hold strategy. And the kicker is there is zero fixed fees in this product. We also have an option for fixed fees, but then the thing is, if we do not, you have the first option of choosing a zero fixed fee option, which is beyond 6%, which is the average inflation rate in our country. Only then we would want to charge you fees. So if the product gives you more than 6% on the excess, we would charge you a fees, which is the kicker in this product. And as always, a great investment involves two distinct characteristics of a stock, basically strong fundamentals and attractive valuations. Now, when I look at checklist number 1 to 5, which gives you good corporate governance, strong leadership, industry leaders in high growth metrics, and zero low leverage, I've pretty much done the whole job. But what I have to be very careful about is reasonable valuations, because The thing is, we have seen in the past that even great companies which have ticked off the first five in this list have been failures in terms of investment, primarily because the entry point of each investor has been different, or it has not been, the valuations have not been reasonable. This way, what we need to ensure is, for it to be a great investment, we need to ensure that it needs to have strong fundamentals, plus we need to buy them at the right price. When we say strong fundamentals, the first and foremost is corporate governance. So certain things can be put on paper, right? Certain quantitative things can be put on paper. I can say that this company is going to grow at this pace, this company is valued this much. But what we cannot really put on paper is the qualitative factor like corporate governance. So this comes with a long standing. So this comes with a lot of qualitative track record that the company needs to tick off before which we get into which it gets into your TRUBLU portfolio. And obviously, the second point is also very similar, which is a strong leadership team with a track record of execution. So you've seen managements do a lot of ambitious things and promise a lot of ambitious things, but fall short on execution. So when we look at managements, we look at their track record. So there will be certain managements who are very, very conservative with respect to their approach. They'll be very conservative with respect to their outlook on the company's growth, but then they will tend to outperform whatever they talk about. So those are the kind of leadership teams and corporate governance metrics that we look for in our company. So once that is done, we need to look at if they are industry leaders in their respective segments. When we say industry leaders, they need to be on top of the industry leadership pyramid for them to, and for us to ensure that they have good cash flows, and for us to ensure that they have stood the test of time, and high ROC, which is pretty much straightforward. They need to have high return metrics and obviously zero or low leverage. We primarily get into those stocks which have zero or low debt in their books. This way, they have a higher tendency to retain cash in their books, and your higher dividend payout also is going to be a consequence of that. And finally, like I had initially explained, reasonable valuations along with all this will give you a winner of a stock, which is what we predominantly will get into, or which is what we will get into in our TRUBLU portfolio. And I would like to show you some of the key portfolio bonds of our TRUBLU portfolio in the next few slides. The four pillars of TRUBLU. Though it looks simple, portfolio construction is one of the hardest things to do in terms of portfolio management. Why? Because position sizing is very, very important with respect to any portfolio management, be it a large cap portfolio or a small cap or a multi-cap portfolio. Why? Because I can choose a winner stock, basically a stock which goes up 4 times, 5 times. But then if my allocation to that specific stock is less than 1 or 2%, the attribution doesn't come to you in the form of the portfolio returns, because your portfolio returns are anyway going to be minimal if your allocation is not adequate. Or let's take the other way. I have taken an excess risk in a specific stock where where it is not meant to be taken, and it affects the portfolio in a very, very skewed proportion. That way, my experience with running your portfolio is not going to be the same if my allocation is adequate. So I need to ensure that my portfolio construction is very, very focused, very pointed, and very, very adequate. Next is the quality. So when we have a very beautiful setup with respect to portfolio construction, what we need to ensure is just quality in the stock, right? It is kind of, so let's say if you get a blue chip company, you can just straight away call it a quality stock. But like I had mentioned in the beginning of the presentation, what always reeks quality may not be actually quality, because we've had companies like Yes Bank or DHFL or even MTNL talking about quality as part of their books or as part of their business. But then the thing is, quality, when we say it needs a lot of introspection in terms of research, in terms of what they have done in the past and how they're going to grow in the future. And with respect to profitability, that is pretty much a given, right? We need to be investing into, or TRUBLU intends to invest into, highly profitable companies with high pockets of or high prospects of growth in the future. So with all these four pillars put together, you get a very high quality large cap blue chip portfolio, which you can sustainably hold for a long period of time. And like I said, it's going to be a very concentrated large cap portfolio of 20 stocks. And it is going to be a pure large cap portfolio, and it is one of a kind in the country. This is the balance sheet quality of our TRUBLU portfolio. If you look at each and every sector that we are into, that the TRUBLU portfolio is into, you can see that the return metrics have been very good in for FY22 basically. So if you look at, we are into auto, we have a good standing on banking and NBFCs. And if you look at the GNPA ratios also, they are one of the best in the industry. So you are getting a high quality large cap portfolio across different diversified across different sectors with high return metrics and predominantly or rather a 95% debt free portfolio. And this is the comparison between the Nifty 500 and the TRUBLU portfolio. If you look at the Nifty 500, which has 500 stocks, out of that, the TRUBLU stocks, which are 20, they contribute around 22% of the profits made by the overall Nifty 500, which means that your 4%, which is 20 out of 500 stocks, which is 4% of the stocks, they contribute to 22% of the total profits of the Nifty 500. What this means is very, very simple. You're getting the highest, most profitable companies which are part of your TRUBLU portfolio. But the only catch here is you need to buy them right. So you need to make sure that the pricing, or you need to wait it out. You need to be gradual with your investment to make sure that your buying price is right. And the profitability across different time periods. If you look at the PAT of our current TRUBLU portfolio against the NSE 500 PAT, it is always going to be 20 plus. It has always been 20 plus. So in FY17 to 21, it has been 25%, 20, it has been 46%. So this way we are ensuring that even in the small subset of a concentrated large cap portfolio, we are giving you the highest or the most profitable companies of the universe. And the profit ranking. If you look at how our companies, if you look at the first 10 companies which we've put out on the slide, you can see every other company, and even from company 11 to company 20, you can see how they've performed in terms of the profit ranking. So this gives out how they have grown over a period of 10 years, right? So if you look at HDFC Bank, it had the 13th position in 2012, while it is the 5th position in terms of profit in 2022. This shows how much it has grown in the last 10 years. The same thing with HDFC, or with respect to HCL Technologies, or with respect to TCS. All these companies are companies which have grown from a very, very grown from a big company to a bigger company, right? Even 2012, TCS were one of the biggest companies in India. Same is the case with HCL Technologies or HDFC. But even in those big companies, how they have become bigger in the last 10 years is what this TRUBLU table captures. So this is exactly what we are trying to capture in TRUBLU as well. You get the biggest companies in India and you make sure that you travel the path with them when they get to grow bigger, as and when India grows bigger. So that is a very simple and a small one-liner of a TRUBLU portfolio. You wait or you travel the distance with big companies while they become bigger in the future. And once we look at the fundamentals, right, it becomes important how we create our wealth with these blue chips. So it is important that you look at a few blue chip or a few TRUBLU champs who've created wealth for our investors in the past. And this is the big picture. If you look at the Nifty earnings that have been over the 20-year CAGR of Nifty earnings has been 12%. And it is always that the Nifty value, or rather, it is a very simple fact in the market that your value always follows your earnings. The price always follows the earnings in the long term. So short-term pain might be there. Definitely, Nifty may not perform 1 year. Nifty may not perform for even 2 years. But then over a period of 20 years, you can see the earnings, or you can see that the price growth that it has delivered, with the earnings growth being 12%, the price growth that has been delivered is 15%. So this big picture is what we need to look at when we look at India or when we look at TRUBLU. This is the first TRUBLU champ that we want to show you, which is HDFC Bank. So you can see that the HDFC Bank has been an execution machine, right, over the past from 2002 to 2023. So that's a 20-year track record, which has been, it has just been an execution machine. If you look at its past, right, what it shows is very simple. Across every 5 or 6 years or 7 years, it tries to convert its quarterly numbers into, or it tries to convert its yearly numbers into the quarterly numbers. Just for example, if you look at FY16's yearly profit number, it equals the quarterly number for FY23, that is December 2022, right? So this has been its execution, and this is not the first time it has been doing it. This has been happening in 2002 versus 2007, 3 versus 8. So this table actually tells you that every 5 or 6 years it converts or it matches its entire earnings of a financial year with just one quarter. So this has been repeated, and this is not the first time, and we are very sure this is not going to be the last time as well. So HDFC Bank is one of our TRUBLU champs, which has actually executed heavily in terms of performance in the past. And where does this get reflected, right? Ultimately, for us to make money, it has to get reflected in the price. Let's look at that now. If you look at TRUBLU, if you look at HDFC Bank, its share price has appreciated over a 10-year CAGR is around 17%, while its book value, which represents its fundamentals, is around 21%. So this just shows one thing. So let's say if you look at a period between 31st December 2019, or rather 19 to 20, at that period when HDFC Bank dipped along with all stocks, you can look at those pockets or the gaps between the book value and the share price. That is where you get in. HDFC Bank is showing us one such opportunity once again, and we currently hold that in our TRUBLU portfolio as well. So this gap is something, what you need to do is you need to pick out that gap between the orange line and the blue line. You invest and you stay put. You're done with respect to your investing for the decade. That is what we've been seeing with respect to HDFC Bank in the past. The next stock is obviously a very well-known stock, or a very widely talked about stock in the country, which is TCS Limited. It's a TRUBLU Champ 2. If you look at the IPO capital which was raised by the company, it was 2,000 crores. But if you look at the free cash flows that it has generated over a period of 17 to 18 years, it is around 2.7 lakh crores. This gives a 17 to 18 year CAGR of around 20%. So even if you look at TCS, it's a company which pays out almost 40%, 45% of its earnings as dividends. So you're getting a cash flow generating machine in terms of a huge company. So like I said in one of the previous slides, we are just looking at companies which are already big and making sure that we stay into the company while it follows its journey from being bigger from big. So that is the essence of staying into companies like TCS or HDFC Bank. But you need to be very pointed with your valuations, and you need to buy them right for you to make money out of a high quality blue chip. Moving on to another stock, which is again a media favorite, which is ITC Limited. If you look at how TRUBLU has played ITC Limited in terms of price, is very interesting. We started buying it at around 200 and 203. We bought it at up to 220. I think we bought it, and we still hold the stock. But you see the stock price, it didn't move at all for over a year between April 21 to March 2022. But we still held on, primarily because things were getting a lot in ITC's favor, which I will show on the next slide. And now proof of the pudding is in the eating. You can see the stock price where it is right now. It has been one of the best performers of FY 22-23, and still we are holding the stock in our TRUBLU portfolio. And why this has happened is very simple. If you look at the financial performance, it was very clear that it was a clear buy at around 200 rupees, which were, even if it came to around for 150, 160 also, which made it an even more attractive buy. But then at a 200 rupees share price, it was a screaming buy for us, which is why you can see the result of it in our current portfolio returns basically. And the results scorecard for December 2022 is just an update of TRUBLU companies and how they've fared in the latest quarter results which were declared. If you look at the top 10 stocks of the TRUBLU portfolio, you've seen that they have an average year-on-year change of, in terms of sales, they've had an average year-on-year change of around 20%. And in terms of Q3, 3-year change also, the CAGR is around 12%. And with respect to earnings, again, it is in a very similar growth rate, which is very healthy with respect to how they performed in the last 3 years, right? So this results scorecard is something that we take into consideration every quarter when the companies declare results, because idea generation is one thing, idea maintenance is going to be another thing. So we need to ensure that all these companies are still on their growth path, If they do not, we need to take corrective actions on the portfolio. So it's not always about choosing the right stock. It is always about managing the portfolio in the way that it is meant to be managed. If you look at the scorecard or the results summary for December, it is scoring a very, very high 5-star marks from us, because if you look at the year-on-year growth, which is the average, is around 20%, EBITDA, which is the operating profit growth, is around 19%, and the PAT, which is around 21%. So this has scored 5 on 5 with respect to, if you look at the overall 20 companies of the TRUBLU portfolio, it has scored 5 on 5 with respect to its financial performance in the December quarter. If you look at our companies also, the year range, if you look at the range also, it's predominantly above 15% that our companies have grown. So what you are in essence getting is a company which is performing quarter on quarter on a very consistent basis. So what you need to do is simply follow the valuation tools, buy right and sit tight. That is what TRUBLU is all about. And this is the TRUBLU promise. We are going to be buying highly scalable and high quality blue chips. We're going to be buying profitable businesses, the most profitable businesses in the country, and we are going to ensure that we buy them right. And this, in essence, will ensure that you create wealth over the long term. And all this with a highly profitable, with a high quality businesses in your portfolio, which will ensure that you get a good sleep with a TRUBLU portfolio, which is much more than what high risk portfolios can offer you. And this is the fact sheet for Feb 2023. We have our fund managers, Mr. Shyam and Mr. GR Balaji, and our AUM is currently around 25 crores. It's a large cap portfolio, and it's a concentrated large cap portfolio with just 20 stocks. So it's a large cap allocation, is 93% with cash, around 7%. And our top 10 holdings have around 70% allocation. And if you look at the beta, it is one of the best or it is one of the least volatile in the country, which is 0.72. Right? So you get a portfolio which is less volatile and high quality. That is a mix that is actually a killer, right? So you would get a high quality portfolio with low volatility. We have our investment team, Mr. Shyam and Mr. Balaji. Mr. Shyam is the ideator and founder of ithought, and Mr. Balaji is the head of research and co-fund manager of TRUBLU. And the entire team. So we have a very solid team of CAs, CFAs, and we have good. We have people from the fund management team who've had a very good history in the public markets. Mr. Balaji, Mr. Rohit, Mr. Rajat, and Mr. Naranjan, who've had a lot of experience in the public markets, over 16, 17 years of experience. So it's a solid team that you're getting to manage your product. And the portfolio performance for your view. So if you look at the last 1 year, you can see the gap between the benchmark and the TRUBLU portfolio. When the benchmarks have actually been struggling, what TRUBLU has actually done in the last 1 year is commendable. So this is something that I'll give you all 2 minutes to look at, after which I'll move to the next slide. Okay, I'll move on. And the key terms of the TRUBLU portfolio, as always, it's going to be 50 lakhs, which is the minimum investment as per SEBI regulations. And the benchmark is Nifty 50 because it's a large cap portfolio. And with respect to exit load, we don't have any exit load in the portfolio. You can, as such, if you look at the fees, we have another option which we have recently added, which is a fixed fee option. Plus, the first option, as always, is a 6% hurdle with no catch up and a performance fee of 20% of profit share above the hurdle of 6%. This basically means that you don't pay for the basic average inflation rate of 6%. Anything above the average inflation rate of 6%, you give us a performance fee of 20% on the profits. So if you are okay with the performance fee structure, you can go for option 1. Or if you tend to go for a fixed fee, I don't want to give a variable fee for the product, you can go for a fixed fee, which is 1%. And all the other expenses are at actuals, which mean your brokerage or SCT, which are your normal charges, charges that you have in your normal transaction. When you do your normal transactions, you have your brokerage and SCT. That is all that all the other expenses be. I'll give a minute or two for you all to go through the key terms before which I'll move to the next slide. Okay, I'll move on. So that's it. We've come to the end of the presentation, and floor is open for questions. You can type in your questions in the chat box or the comment box, and I'll be able to answer them for you. And this is just your this is our contact information for you to get in touch with us. So I'll just keep this on the slide for you all to take reference to. You can type in your questions on the chat box that is on your Teams window. Question from from Dr. Santosh. Is minimum investment rupees 50 lakhs? Yes, sir. So as per SEBI regulations for any PMS, the minimum investment amount is rupees 50 lakhs. So TRUBLU is a PMS. It's under the PMS structure. So the minimum investment would be 50 lakhs as per SEBI regulations. If you have any questions, you can type them out in the chat box, which is on the top left of your screen. Okay, the second question is from Mr. Paramasivam. What is your churn ratio for the past 1 year? So since it's a long-only portfolio, it's only a long-term portfolio, our churn is always intended to be very low. With that in mind, the last 1 year churn ratio for our clients would have been around 15 to 20% and not more than that. And question from Mr. Prashant. Once the total investment is given, what is the tenure in which ithought deploys the money? So that's a great question, sir, because like I had mentioned, what TRUBLU intends to do is gradually invest your money, because all blue chips or high quality blue chips, which always trade at very rich valuations, are not available in the market at favorable valuations all the time. So what you need to do is you need to wait it out and get in at the right time. So you have to be very, very pointed and gradual with your approach. So with that in mind, we need to ensure that the money is being deployed in a very, very gradual way. So let's say you give money at a time where the markets are offering a lot of investment opportunities in terms of high quality blue chips. At that point of time, we go aggressive. But let's say as September 2021 comes again, where the overall market itself is very, very expensive. At that time, our investment deployment would be very, very gradual, sir. So it is going to be extremely dynamic in which your money would be deployed into the TRUBLU portfolio. Hope that answers your question, sir. And the next question from Mr. Aragiri Chinnappan, looking for next 3 years, what is your expected return in this TRUBLU? So with respect to returns, what we expect is over the benchmark, we intend to do 400 to 600 basis points over the average inflation rate. So that is what we are looking at with respect to TRUBLU, which is 4 to 6% above an average inflation rate in India. Next, hope that answers your question, sir. And next question from Mr. Arun G. Fees is only 4% if the growth in portfolio is 10%. Yes, sir. Yes. So the fees will be calculated only on the 4% if the portfolio growth is 10%. So which means 10 minus 6%, which is 4%, and 20% of the 4%, which is 0.8%, will be the fees for that year. And the next question from Mr. Soma. How does this fund's return compare with other large cap mutual funds? So you can get in touch with one of our representatives. So we will give you a chart which compares our funds return with other large cap mutual funds. We have made a comparison as well. So you can definitely get in touch with the number that we have displayed on the page, and we'll be able to help you out with that. Question from Mr. Annamalai Jagadishan, sir. What about your portfolio P? Sir, if because like I showed in one of the presentation slides, our portfolio is going to be a mix of banking stocks, NBFC stocks, insurance stocks, and other. It is well diversified and well balanced. So portfolio PE does not really hold. Or it would not be the right valuation tool to assess the valuation of our portfolio. That being said, if you look at our portfolio stocks, which are usually assessed with the price earnings ratio, even if you look at those stocks, you don't get those stocks in a very, you don't tend to get them very cheaply in the market, primarily because of them being very high quality blue chips. With that in position, our portfolio P can vary based on each portfolio entry point. So basically, our portfolio is curated based on the entry point of each investor, sir. So there's no consolidated portfolio PE, but as such, we have a system or a valuation system where we ensure that their average PE or a 5-year average PE, we don't go beyond the fair value valuation of a specific stock because we are looking for opportunities in the market, like only when HDFC Bank or a stock like HDFC Bank gives you a good entry point we get into. So as such, if you look at the entry point of each of our stocks in terms of portfolio of PE, it is going to be less than their 5-year long-term average. So that is how, hope that answers your question, sir. And question from Mr. Shankar S. Under fee option 1, what does no catch up mean? So no catch up means there's no catching up with respect to the performance, which means that let's say in TRUBLU we perform 10%, like in one of the questions which was asked previously. The fees will not be charged on the 10%. It will be charged on the excess between 10% and 6%. So there is no catching up. So there's only for the excess, this 20% will be charged, which is 10% minus 6%, which is 4%. On that 4% performance, 20% will be charged. So this, in a sense, is what no catch up means. And next question from Mr. Paramasubham once again, what is your selling strategy? Selling strategy is pretty simple, sir. With respect to valuations, again, we need to ensure that so what we intend to do with TRUBLU is buying companies at a lower or fair valuation and selling them when the valuation become very heated, or when the valuations are when a company is too overvalued to hold in your portfolio. So that is when we will deploy our selling strategy with respect. So it is not going to be a high churn or a high momentum or a trading portfolio where we will be doing a lot of selling. It is going to be a buy and hold portfolio where we buy at a low or a fair valuation and hold it until it becomes expensive, after which your selling will happen in your TRUBLU portfolios. And question from Mr. P. Is that considering the deployment happening across multiple clients at multiple instances, what is the difference between return obtained between the highest gain client and the least gain client? Okay, this is a good question, sir. Primarily, the deployment happening across multiple clients at multiple instances, how we work as a team is something very interesting. So let's say you're a client who comes in at a time when the stocks are really expensive, right? I wouldn't or we wouldn't deploy our deployment strategy in a very aggressive way. We would be very, very gradual. We wouldn't be deploying money as soon as you give us the money. So we don't go 90%, 95% on day one if the markets are very, very expensive. But let's say you had given us money during March 2020, right? At that point of time, it doesn't make sense for us to actually hold cash in your portfolio. It makes sense for us to go gung-ho about buying. At that point of time, the deployment will be very, very aggressive. So when our clients join us at multiple instances, we want them all to have very, very similar experiences. So if you look at the return obtained between the highest gain client and the least gain client, the experience would be similar. But then since their tenure is different because of their date of entry, the difference might differ. But with respect to experience over a period of, let's say, 3 years, once one client, let's say a client completes 3 years at one point of time, and the other client also completes 3 years at a different point of time, we're very sure that we would be giving them a very similar experience in terms of investment, primarily because our deployment is very, very pointed and very specific to the date of entry of each client. So what we also ensure is that once the deployment is complete from the client's end, we also keep looking for opportunities in the market. And later, when the opportunity becomes bigger, we give you a call asking you for additional money to be deployed into the portfolio. So at that point of time, what happens is, even if I'm not able to buy a specific stock for a client because of his or her entry, I will be able to buy that position when it comes back to its original cost, or rather comes back to a cost which I'm comfortable with respect to investment. So with this, the investment will be very, very interactive with the client, and the client will play a big part in terms of the returns obtained, because you will see a lot of our clients in our other PMS products also who've had experience of investing regularly at around 5 to 10% and a very for a quarter or 3 months of your overall portfolio value. That kind of focused investment, whenever we call for that additional investment, right, that has actually enhanced their investment experience tremendously. So that is what we would suggest. So once you come in, we would anyway deploy the money gradually as and when, based on the context of the market. And once we deploy the money, once we run out of cash in the portfolio, at that point of time, even the opportunities also coincide with that kind of a situation, we would pick up the phone, give you a call, and ask you for additional contribution to help us build positions in those stocks at much better valuations than when you had initially started. So that is how we intend to gradually build your portfolio over a period of times. Hope that answered your question, sir. And question from Mr. Sivakumar Prakash. As you have mentioned, 7% cash and equivalents. Could you please explain about it? So this 7% is as of 28th of February 2023. So this 7% is on the overall AUM of the TRUBLU portfolio. So it is a combination of all clients' portfolios, cash and cash equivalents put together, and on the average on the overall AUM of the TRUBLU portfolio. So around 25 crores, 7%, which is around 2 crores, will be our cash and cash equivalents in the portfolio currently. And the question from Mr. Rajashekar, for new investors, how long it takes for the full amount to get invested? So as I had explained to one of the previous questions, it depends on each investor's entry point, sir. What happens is I need to be as dynamic. We cannot have a very fixed ratio of this is how much we would deploy on day one or day two, but depends on the context of the market. Like I had mentioned in one of the previous answers, the context really matters, because in March 2020, it doesn't make sense for me to go gradual with my investing. In March, if a situation like March 2020 happens, at that point of time, I need to be very, very aggressive. So for new investors, depending on the date of entry of each investor and how the overall market valuations look, we will deploy it accordingly, sir. Hope that answers your first question, sir. On your second question, how does it differ from a good large cap mutual fund, sir? So we normally refrain from taking any comparisons, sir. But then the thing is, you wouldn't see a 100% pure large cap fund in the country primarily, and a very focused or highly concentrated, which has only 18 to 20 stocks, 18 to 20 large cap stocks in the portfolio. This kind of a concentrated high quality large cap portfolio is something that you would exclusively find with our TRUBLU portfolio, primarily because what we like I had said, it is not easy selecting a blue chip stock as well. Taking the example of a Yes Bank or an DHFL, once again, they used to be called as one of the best blue chips in the country, but then you all know where they are today. So with respect to our companies, they're just not going to be the blue chips which exist in the market. We are going to have the best of the blue chips that exist in the market. So that gives it the icing on the cake. That is how we differ, is what we would say, though we refrain from taking any comparisons with any other funds. So hope that answers your question, Mr. Rajashekar. Any other questions? You can type them out in the chat box. Fee is charged on each sell trade or how? No, sir. So fee is charged on so if you're going for a variable option, right, without any fixed fees, in that case, fee will be charged on the portfolio's returns. That is, it is immaterial whether there is a sell transaction or not. It is on the portfolio value. So let's say you start with a 50 lakh or 1 crore portfolio today. At the end of the year, so let's say you start on 1st of April 2023. And at the end of the year, that is end of the financial year, which is 31st March 2024, let's say your portfolio is up by 10%. At that point of time, let's say up by 10% means it's on 1 crore, it is 1.1 crores. It is at the end of 31st March 2024. At that point of time, our fees would be deducted on the excess of the performance that is made over and above 6%. In terms of 1 crore or 1 crore, the excess performance over and above 6% will be around 4 lakhs, which is 6 lakhs would be the 6 lakhs would be the performance that we intend to, or rather we have to overachieve for us to actually charge you the performance fees. In that case, the performance fees will be 4 lakhs. On 4 lakhs, it will be 20%, which will be around 80,000 rupees. So fees is charged on the portfolio value at the end of each year. And in terms of the first option, that is at the end of each year, where we check the portfolio value and see if we have crossed the hurdle rate, which is 6%, and on the excess we charge 20%. And in option 2, which is a fixed fee of 1%, it is charged on the daily average value of the portfolio over 365 days. So this 1% will be charged on a quarterly basis. This 1% is on a per annum basis, which will be charged on a quarterly basis from your client, from your portfolio value, which is, let's say you start with 1 crore. You see it going up and going down, and the average trading value of this 1 crore is, let's say, around 1.1, right? At that point of time, 1.1 into 1%, 1.1 crores into 1%, which is around 1,10,000, will be our fees for that year, based on the average portfolio value of the portfolio for the 365 days, or on a pro rata basis we charge based on the entry point of each investor during the financial year. Hope that answers your question, sir. And another question from Mr. Rajashekar: maximum stocks is limited to 20, or it's flexible? It can be, like I said, it is going to be flexible, sir. Why? Because not all stocks are available at good valuations or comfortable valuations at all points of time. But we would predominantly try to restrict it between 15 and 20 stocks, because it's going to be a high quality concentrated large cap portfolio. So it can maybe 1 or 2, let's say it can go to 21 maybe primarily, but then predominantly we are going to limit it to 20 stocks primarily. Why? Because it's going to be a concentrated large cap portfolio. And the next question from Mr. Soma: any exit load? There's no exit load on our TRUBLU products, sir. The exit load is nil. Question from Mr. Saravanan Ramalingam: are you maintaining each individual profit? Okay, so I'm not sure. Okay, what I understand from the question is that are all stocks contributing to the overall portfolio, is what I understand from the question. With that in mind, I would say all stocks are definitely held with the intention of creating profits for our investors in terms of investment, right? So with respect to any stock that we hold in the portfolio, there might be stocks which do not perform immediately. There might be stocks which perform immediately. So it is going to be a mix of all that, which is why we have a good diversification strategy of holding around 18 to 20 stocks. So with that, over a period of 3 to 5 years, we intend to give a good experience on the overall portfolio level for all our investors. And question from Mr. Aragiri Chinnappan: what about advanced tax? So we have a reporting system in our firm where we send out advanced tax reports every quarter. So let's say you have let's say for this quarter, which is the liability to pay advanced tax falls on the 15th of March. We would have sent you your advanced tax reports. We would have generated those advanced tax reports and sent it to you at least 7 to 10 days before your advanced tax liability. So you would predominantly get your advanced tax reports around 7th or 8th of each advanced tax due month. So around March or June or September or December, you would primarily get your advanced tax reports around 7th or 8th of each quarter. So you would be intimated of those sale transactions and any capital gains or dividend, if any, in your advanced tax report. So you can just forward them to your chartered accountant to file your taxes and pay your advanced taxes on time. Hope that answers your question, sir. And question from Mr. Satish: if there is any negative return, how you calculate charges? So like I said, it's on the, let's say it's the option 1 that you're choosing on the portfolio, sir. It's in case there's a negative return on the portfolio with respect to the option 1, we do not charge any performance fee, because we have to perform above 6% for us to charge you any fees on the portfolio. And with respect to this 6% also, it also holds a high watermark. What this high watermark means is, let's say you invest 100 rupees today, your portfolio becomes 112, and 112 will be 6% over and above the hurdle rate of 6%. So which is 20% of 6% will be around 1.2 rupees. So let's say in essence, with all the charges, it comes to 1.5 rupees, the fees. So 112 minus 1.5. So the 112 minus 1.5 will give around let's assume 111. At that point of time, 111 will be the starting point for your the next year's charges. So from 111, I need to calculate 6% hurdle and then charge you fees for the forthcoming years. That is how the high watermark principle works. And in case of any negative return, there is no performance fee charged if you choose the option 1, sir. Hope that answers your question, sir. And question from Mr. Kannan KK. Hi, could you explain briefly the PMS's overall product portfolio performance versus individual person's portfolio performance? Understand it varies for individuals. Could you please elaborate the calculation methodology for our understanding? Okay, so as such, if you look at the overall product portfolio performance, is the average of funds, average of all portfolios put together, sir. So it is like all the, so let's say all the clients' transactions are considered as one client's transaction, right? To put it very, very simply, all the transactions for all clients across the portfolio or across the product, let's say TRUBLU product, put together as one portfolio performance. That is what the average PMS overall product performance means versus the individual person's portfolio performance. So it will vary, but our intention is to always give a very, very homogeneous investment experience to all our clients, which is why we have taken this route of investing in a very, very gradual way based on the entry point of each investor. So which is why even in a portfolio product like TRUBLU, which consists of blue chips, we do not employ the model portfolio approach, right? So your portfolio can vastly differ from a portfolio which has been curated 6 months or 7 months or even 3 months back because of the valuations that exist at different points of time. So this, in a sense, will be the portfolio performance, product portfolio performance will be the average of all these portfolios put together. So each individual person's performance will not vary that much. If you put so let's say 2 people entering at the same time obviously will not have the same portfolio performance because they entered at the same time, because at that point of time we would have curated the same portfolio for both of them. But for people entering at different points of time, they will have a specifically curated portfolio so that the experience is very, very homogeneous across different client portfolios, sir. And the next question from Mr. Karthikeyan SE. What is your recommendation for deploying additional investment SIP or lump sum whenever there is a better opportunity? That's a great question, sir. So a lot of our investors, what they do is they start an SIP in our PMS as well. So a monthly amount like 1 lakh or 2 lakhs after the initial 50 lakhs keeps coming into the portfolio. So what happens is we have the required cash whenever there is an opportunity in the market. So at that point of time, when there is no opportunity, when the opportunity is not very inviting, or when the valuations are too expensive, what we do is we still hold your cash even though the SIP keeps running. So there is no compulsion to invest your money even if you invest on a monthly basis. So what happens is we accumulate or keep that cash in a liquid B's account, a liquid B's ETF, or we just hold the cash if we foresee an opportunity in the near future. And then when the opportunity comes, right, once the amount is also a little bit sizable for us to invest a good amount of money into your portfolio, we then deploy the money. So it is not like once you start your SIP and keep sending money every month, we will do the transaction as soon as the money comes in. No, it doesn't work that way. It works only when there is alignment between the opportunities that we seek in the market and your money. So whenever the opportunity becomes bigger also, what we do is we specifically pick up the phone and then ask you for that exact amount that we require from you. So let's say we need to deploy additional money of around 10% or 15% in your portfolio, and we have 2 or 3 different ideas where we want to deploy this money. We would be very specific with our request for that additional contribution. And at that point of time, when your liquidity also meets our requirement for additional contribution in your portfolio, you will be able to get a very good experience, because the assets, our call will come only when the assets are very, very cheap. That you can take it from us, because whenever we make a call to our clients, it's not just to improve our AUM or improve the cash flows in your portfolio. It is specifically only when the assets have become cheaper in the market. Hope that answers your question, sir. Questions from Mr. Soma. What is your current AUM? Our current AUM is around 25 crores in TRUBLU, sir. And overall, as a PMS, we manage around 1,000 to 1,050 crores of AUM as of today, sir. Question from Mr. Karthikeyan. Do you have a maximum AUM allocation to a specific stock from the list of 20 stocks? As of now, we have taken bets as big as 10% or 10 to 11% also in our portfolio of stocks. So that being a very large cap, high quality, large cap, high concentrated large cap portfolio. So if you look at maximum AUM allocation, it can range anywhere between 10 to 12%, sir. That is something that we would take as the maximum allocation to a specific stock, that is. Hope that answers your question, sir. Any other questions can be typed out in the chat box. It's on the top left corner of your screen. It is close to the timer, so you can click on the chat button, which will open your meeting chat where you can type in your questions. Okay, question from Mr. Kanagaraj. Current situation, which PMS service your side, Solitaire or TRUBLU? So Solitaire and TRUBLU are both very good products, obviously. So the thing is, with respect to each product that we have in our universe, right? It depends on the client. It depends on the type of risk appetite that each client is okay with taking, the kind of risk appetite that each client has, right? The kind of risk that each client is willing to take. With respect to Solitaire, it's a multi-cap portfolio which consists of 25 to 28 stocks, which invest into large caps, mid caps, and small caps. While so TRUBLU is very, very concentrated. It goes only into the blue chip large cap segment, which gives you the highest, most profitable company. Solitaire is a portfolio product which goes into the small cap and the mid cap segment, also looking for winners in that segment where the risk taking needs to be a little bit moderate, on the moderate side, right? So with respect to moderate risk taker, which you've just added to your questions, sir, Solitaire will be a perfectly good product for you to add to. But with that being said, a lot of our clients also have a combo which they do large cap portfolio, because this is a portfolio that can easily complement your multi cap portfolio. It's going to be a portfolio which represents your overall low risk taking part of your overall portfolio, right? It doesn't necessarily mean that, let's say, you have some money earmarked for your fixed deposits or your debt products, right? This is something which can easily complement that kind of a requirement. So Solitaire can be something which can give you the moderate risk that you require on your overall portfolio. While this can be a very solid portfolio where you tend to pay fees only when there is a performance in the portfolio. So let's say you make only above 6%, you pay fees in this case, and Solitaire you pay a fixed fee. So it's a combination of both will give you a kicker in terms of the cost saving that you do on your portfolio as well. So hope that answers your question, sir. Question from Mr. Karthikeyan SE is usually PMS has exit load. Any specific reason to keep it without exit load or for TRUBLU? So mostly what we see is the reason why a lot of PMSs have an exit load is that there are certain small caps or micro caps which are being invested into, and any specific redemptions would require a little bit of focused selling from our part. So it takes a little bit of an effort to even sell at that point of time. So in a high quality blue chip portfolio like TRUBLU, right? There's a lot of liquidity for us to get out whenever we want. So those are the companies that we invest into with respect to TRUBLU. So which is why we have done away with charging any exit load, and the investor is free to taking money at any point of time. Plus, a lot of our TRUBLU investors have they've been with us since the start. All they've been enjoying the experience as of now. So as such, even if there is no exit load, they don't tend to take the money out. With respect to that, the reason why we don't have any exit load is there's a lot of liquidity available in the market for all TRUBLU stocks, and it is not necessary that we charge an exit load for that kind of a product. That is the reason, sir. Hope that answers your question, sir. Any other questions? Okay. What is your strategy on idle cash? So our intention is not to keep cash idle. So the thing is, let's say there may be two ways, right? So we may keep some cash expecting a market correction, or rather, maybe let's say we have excess cash in your portfolio, right? At that point of time, we would have kept that only with the reason that the valuations do not support investment today as of now. So let's say I have 15% of cash, 85% which is deployed already in the portfolio, right? All those stocks or all those ideas might be ideas which are valued fairly as of today. But this 15%, there would be an apparent gap. So we can ideally hold it for any correction that we expect on the market, or with respect to any stocks that we track, or with respect to any opportunities in the market. If we don't find any opportunities at a given point of time, we sit on that cash until that opportunity comes to us. So it is very, very opportunity seeking and not just AUM seeking. That is what we would call all our products. That is what we would describe. That's how we will describe all our products as such. Hope that answers your question, sir. Question from Mr. Annamalai Jagadisan. Minimum investment 50 lakhs should be paid to you at one go. Yes, sir. So as per SEBI regulations, the minimum investment of 50 lakhs should be given before we can start investing on your behalf. So as a PMS provider, what we essentially do is invest on the investor's behalf. So what we need as a minimum investment is 50 lakhs as per SEBI regulations before we can start investing under your name. Hope that answers your question, sir. Okay. Question from Mr. Shankar SRL. So TRUBLU was initially called Coin, sir. We've recently rebranded Coin into TRUBLU. So it is, your question is right. We need to change the name Coin in our website to TRUBLU, which we will soon do, sir. Thank you for pointing it out. It's definitely something that we have not done from our part. We will definitely do it. And question from Mr. Aragiri Chinnappan, is it possible with 50 lakhs we can split into TRUBLU and mid or small cap PMSs? Unfortunately, that wouldn't be possible, sir. And primarily what we would also suggest is the experience would be incomplete if you do that, even if there's a possibility of doing that. Why? Because if the reason why we have separate schemes in each of our as each of our PMS products is because they are all very distinct from each other. So TRUBLU has a portfolio full of small large caps, where multi-cap we have Solitaire, and small cap or micro cap we have Riddhi, and a multi-asset portfolio we have something called Sphere, right? So with this way, there is no, with respect to any overlap between these portfolio schemes, right? The overlap will be very, very minimal. So, which in essence means that there is a distinct experience for each of our products. So, though it is not possible, we would also not suggest you to take your 50 lakhs to split it into TRUBLU and other mid cap or small cap PMSs, primarily because you won't get a proper full portfolio experience. So let's say you want a combination of all that. You can either go for a solitaire portfolio which invests into large caps, mid caps, and small caps, or you can go into a sphere portfolio which predominantly invests into multiple assets. That is, it invests into direct stocks, that is direct equity, and it invests into mutual funds, ETFs, global funds, precious metals like gold or silver, and debt as well. So it is going to be a multi-asset experience for you. So which is why we made it distinct, each our product so distinct that the experience is something that you need to enjoy homogeneously. Right. So if you go into a solitaire portfolio, you can get an experience of all three put into one. So that is how we would, that is what we would suggest. Hope that answers your question, sir. Question from Mr. Karthikeyan. Generally, look, good large cap stocks are at high valuations. Won't it be long wait to hold the investment to invest in right valuations? That's so that is the catch over here. So because large cap stocks, right, or rather high quality blue chips, like you rightly said, they won't be. They're always going to be available at high valuations only. But if you look at a stock like HDFC Bank, which is always shown that it has been a quality stock in terms of financial performance, it was available at around 1,300, 1,400 bucks in the last few months, and even now we are holding it in our portfolio with where we see a lot of growth ahead. So these are all times when you invest in these large cap stocks when the overall sentiment of these specific companies is very bleak. At that point of time, you'll get these valuations at a very favorable rates, and that is when you sit tight. And when the financial performance is something that you are being continuously tracking and it is still intact, there is no reason why you should stay out of such high quality blue chips and wait it out. So when the price capturing or when the price catch up happens, right, it happens in a very swift manner, after which you can't actually get into that specific high quality blue chip for a very long period of time, right? There have been many big companies even today. If you had invested in them, let's say a wrong period of time, they still might be one of the best companies in the world, right? Even if you had invested in them during a wrong year when the valuations were too stretched, right? And you wouldn't have still been able to make good returns over a period of time, primarily because your entry point has to be very specific, very pointed specifically in terms of these high quality blue chips, which is where we come from even in terms of large cap blue chips, they can go through periods of weak sentiment, and that is when you hoard and you put in a lot of money, because these are all companies with high liquidity, high profitability, and high earning sustainability. So the risk that you're essentially taking is a lot lesser than what you will be taking in a traditional company which is offering you a good entry point today. So these kind of companies would be large companies which are going through a shorter period of bleak sentiment, and your job is to just pick those companies, sit it out, and wait for the returns to happen on your portfolio. That is what we intend to do with the TRUBLU portfolio, sir. Hope that answers your question, sir. So when you say the second part of the question also, I just realized that I didn't answer. We want it to be a long wait to hold the investment to invest in right valuation. So when we say long wait, our typical waiting period should be around 3 to 5 years in any equity product as such. That is when you tend to look at your long-term sustainable returns, because in the short-term markets, or rather your portfolio can go up or go down, but over a period of 3 to 5 years, whatever returns that you have captured in your portfolio is the actual representation of your portfolio quality, is what we would say. Short-term things can happen. We should just look at those as opportunities, like how it is happening today. Today, the markets have corrected, right? So the markets are offering a lot of opportunities today. So this would be a great time for you to start nibbling and building yourself a very solid portfolio. That is what we would say. Hope that answers your question, sir. Any other questions? Thank you, sir. Thank you. Okay, there are no more questions. If there are no more questions, we can close the presentation. And thank you all for joining us today. It was a Saturday evening. It's not easy for anyone to leave behind a Saturday evening and sit for a webinar. And thanks a lot for joining us today. If you have any questions that you would want to be answered, or if you want to get in touch with one of our people to know more about our product, you can take a look at the contact number on screen, or you can drop an email to pms@ithought.co.in and drop in your queries, and one of us will get in touch with you as soon as possible. Thank you all for joining us today once again. Thank you. Thank you, sir. Thank you, everyone. Thank you.